Well, we have with us the management of Feedback Infra who joins in to talk to us about how the earnings have been and what the sector is looking like. Parvesh Minocha of Feedback Infra now joins in. Parvesh, more than 1.6 lakh crores of orders have been awarded in the fourth quarter in the infrastructure sector. This is the highest seen in a number of years, right? What has changed for the infrastructure space and how is the order inflow looking going ahead?
Okay, so I think last 1 year in terms of order intake has been very good, particularly for construction companies which are in roads, which are in rail, which is in metro, primarily these three, and also the companies which are suppliers to the projects. So whether it's railway wagons, whether it is the construction equipment, whether it is the commodities which are used in the construction, etc., etc. So I think the sectors, particularly road, metro and rail, are doing very well. Orders are much higher. In fact, last year has seen some very good orders, particularly in Q4. Scene was not that great till Q3, but Q4 has seen some very good orders. So I think this looks good, and the coming year, the next few months are probably going to be, I guess, even better than last year. So I think if you sum up about 18 months starting, say, H2 of last financial and about 10 months of the next financial, probably I think infrastructure company would have never had so good. I think it's probably the best period in terms of order intake and therefore whatever they can contribute to the economy.
All right, give a sense of the Middle East, Pravesh, because that's where a lot of order flows have been constrained for a while. Since times are now changing for the oil and gas sector, prices are going up. You are expecting capex-related order inflows to rise as well. Is this going to be substantial for Indian infra players, especially some of the larger companies out there?
Okay, so I think 2 points here. One is saying there are not very many Indian companies which derive a lot of orders from the Middle East. There are not many. One or two companies are more prominent. The other 2 or 3 companies, but there are not too many companies which have too much of work order coming from Gulf. So I don't think it's going to make much of a material difference to companies. Number 2, the oil prices are still just about started going up. Therefore, the sentiment change will take at least another quarter. So I can see some projects have been unlocked. For example, Etihad Rail next phase have been unlocked. I think the consultants have been hired. But by and large, it's too early for sentiment to change in Gulf, particularly with Ramadan already there now. So my guess is if these oil prices continue to stay high, the sentiment in Gulf will change from Q3 of our financial year. So at the moment, there's no visible improvement in orders from Gulf and is unlikely to be there for next about 3-4 months.
Shanta, 56,000 crore orders in the fourth quarter by NHAI. Is this a space that's looking very hot right now?
Okay, so I think 2-3 things there. One is, please remember, the work orders are better. That doesn't necessarily it is not yet translated into higher margins or higher turnover for most of the construction companies. Just about the last quarter odd, there have been some changes in the year-on-year growth. Otherwise, the change will actually start happening now, maybe with a little bit of hiatus during monsoon. So so I think our H2 will be good based on the order which are already there. Number 2, I think save for real estate, inland waterways and most of urban infra. The other sectors, which is rail, remember the high-speed rail, which is Ahmedabad-Mumbai bullet train link, the orders will start flowing out from, say, about October, November, December of this year. So they are huge orders. I mean, the overall orders are of the magnitude of about 70,000-80,000 crores. So these orders will start flowing from Q3 of our financial. Railway is going full blast, highways are going full blast, metro is going very well. Urban infra, unfortunately, not much happening. Transmission, again, there's a lot happening. Solar power, there's again a lot happening. So the companies which are in these areas, I think all are going to do well. But more important than that, if you ask me, I think companies which are primarily the suppliers to these sectors, whether equipment supplier, whether the construction equipment supplier, whether the services suppliers, whether the packages suppliers, they're going to be good. Construction company is going to do very, very well. But I think real estate, inland waterways, most of urban infra, thermal, mining, not much happening in these sectors. Save for these sectors, most other sectors are doing very well.
All right, point taken. FY18 order inflows for the infra space was already 36% higher than the last 6-year average. What are your thoughts on order inflows for FY19? Can we expect this kind of momentum to continue? On a YOY basis, can we see at least 10 to 15% growth as far as order inflows for infra sector as a whole are concerned?
Let me shock you guys, okay? My guess, we are going to see a uptick of about 25%, not less than that. Every sector you just named, I think these guys will probably cross 5 lakh crores this year. So I think we're looking at more than 25% uptick from last year in terms of infra as a whole, with rail and road taking the major chunk.
Parvesh, in railways, which sub-segment is going to get traction, you think?
Rail signaling and also bullet train. Remember the bullet train, the target for at least part completion is August 2022. Full completion is December 23, which means the orders will be placed before the elections are announced. Now, even if you take, they place about 60% of the orders, which is mostly civil and S&T and other stuff. That will be about 55,000 crore. Now, that was not in the count which you did in the last year. So you add that 55,000 crore coming straight only for bullet train, and the other nominal increase of 20% over last year, you probably will hit about 5 lakh crores.
All right. Also, give us a sense on the water segment side of things. We haven't seen too much of traction over there. There are still a couple of projects the government is looking at. But as far as order activity from water segment goes, what are your thoughts on it?
So I think water, there's a bit of a difficulty, remember, because water being mostly the municipal subject and the state subject, it is not in the same league as the other larger ones. But you're right. I mean, Amrut, for example, there are a lot of projects now where the city challenges have been accepted, the smart cities have been accepted, the funding is in place. So a lot of basic infrastructure creation, which includes water, wastewater, sewage drainage, as well as Ganga cleaning. So I think all these are going to happen in the next year. So I would be surprised if 32,000 inches closer to 50,000 next year. So I think, yes, water will also see an uptick. Transmission will see an uptick again. So I think these sectors again look good. But remember, water packages are small. They're more at a municipal level. They're more at a state level. There hardly any federal water work which kind of happens.
Parvesh, how is the competitive intensity and margin progression profile if there are so many orders currently?
So I think FY18 and FY19 both have seen expansion of margins. I think gone are the days when most bids used to be below the government estimate, other than the pure EPC jobs. EPC jobs are still lower than the estimate, but most other are coming above estimate. Margins are expanding, margins will expand further, because now the capacity is becoming an issue. Therefore, there is no great rush for people to go headlong and grab orders at any cost. So I think not only you see higher growth, you'll also see probably higher margins.
All right. So then wrap it up for us, Parvesh, what's the kind of, outlook that you have from a slightly longer term perspective? Is FY20 going to be much lower than FY19? Because, of course, there's also going to be some kind of election related skewedness. Or do you feel that the industry is now set for many, many years of strong order inflows?
No, I think FY20 will see a dip. Because most things which normally take 2 years to complete in terms of project preparation, therefore should have naturally come in 20, are all going to happen in 19. So my guess is yes, 20 will see a dip. And also, I think we don't know, there's a bit of a political issue, who's going to come, what's going to happen. So I am no expert of that. But I think 20 from a project preparation and from a pipeline of ready to shovel projects, 20 will see a dip. Yes.